The most important, the investment environment going forward will be very different from the environment of the past. I mean, think about it as a zero and very low returning asset environment, because the liquidity that's in the market is driving the excess returns of all markets down to be low in relationship to the very low cash rate. So negative real returns, not good for cash and so on. The most important thing is to know how to diversify well. And what I mean by that is to go beyond just the traditional 60-40 stock bond mix, or even the same countries, and to broaden that diversification. To include in that portfolio assets that might seem unusual, to include some gold, to include inflation index bonds, to think about the currency exposure, to think about safety as different. Most people think that cash is safe. Cash is the least safe investment. It just doesn't have the same volatility to it, but it has, because they're producing so much cash, it has a negative real return. It's a tax that maybe 2% a year you lose money in terms of cash. So you have to think about risk differently, and you have to diversify best. That's the most important thing, to have a well-diversified portfolio. The uncertainties that we have today are so great in terms of all the things I mentioned, the tax policies, the geopolitical. Certainly we must experience it with the virus. Will the next wave come back, and how will it be there? Diversification can be achieved without reducing your expected returns because of the way that asset classes are priced. And then if you're going to take tactical bets from those, then those tactical bets, alpha on top of that strategic, well-diversified portfolio, should have highly diversified bets deviated. Liquidity is going to be more important than before because things change in unexpected ways. Look at how, in many of the cases, the businesses that one would have thought was a good business, and let's say you're in private equity, and that you're with that company. And so the restructuring, the ability to rebalance and diversify, and to be cautious about making a highly diversified set of bets is, I think, the future. But thinking even of asset classes, thinking about the value of money. We look at asset classes and we say, oh, do I want my money to be in stocks, and which stocks? But we don't think about stocks, bonds. We think about those traditional asset classes, but we don't think about the value of money and what's going to happen in terms of the printing of that value of the money and how to diversify it well. So I think those are the things that have to be paid attention to, in much as they were important things in years prior to 1945.
It seems like you've got a big weighting in financials, and of course you finally invested in Jamie Dimon's company. Why banks right now?
They're businesses I understand, and I like the price at which they're selling relative to their future prospects. I think 10 years from now that they'll be worth more money, and I feel there's a very high probability I'm right. And I don't think they will turn out to be the best investments at all of the whole panoply of things you could do, but I'm pretty sure that they won't disappoint me.
This car right here, this Rolls Royce Wraith with freaking the magic astrological zodiac sign built into the ceiling with little sparkles. Dumbest damn thing you could ever buy in your life is a big, expensive luxury car. In fact, in my rant today, I want to share with you one of the things that I did smart in my life was I never bought these exotic cars that everybody seems to go out and buy as soon as they make a little money. What I did was this. I waited to ever do a dumb thing like this. One of the dumbest things I ever bought in my damn life, I waited until, number one, I didn't have to buy one, and number two, until it didn't matter. I just got my financial statement in 3 months, the first 3 months of this year compared to last year, a double. You understand what a double is? A double means I can do stupid now. okay? Look, once you make enough money to where you can blow $461,000 and it don't matter, then go do it, okay? Until then, do not waste your money. I'm sorry, this car was only $384,000. I didn't want to exaggerate to you, but I think they added some stuff to this bad boy. So look, until then, don't waste your money on watches and cars and Brioni suits, okay? It's ridiculous. You guys that are buying $1,200 shoes, stupid. You guys that are buying $200,000 cars, stupid. You guys that are spending money on homes, no offense, but you're stupid. You don't need an expensive house. You don't need a country club yet. What you need is paper. You need money, baby. You need net worth. You need passive income. You need flows, baby. Flows and flows and flows. You don't need a Rolls Royce.
You were starting your own company, but what expertise did you have to start your own company in the business world?
I had no expertise.
Okay.
And there was really no reason to give me any backing. Fortunately, my first foray was in silver in 1993. And the zeitgeist was that silver was going to go down to $2 because digital film would supplant silver halide. I believed that people got the analysis wrong and that silver had a better chance of going back to 50. So I put my money on silver options. And silver went from $3.50 to $5.50 in relatively short order. And I made enough money to decide that I didn't want to do that anymore, but I would take all that money and put that on buying an option on a silver property.
Well, let me make sure I understand. Where did you get the money to buy the options?
I started with $10,000.
Okay.
So I had, a little bit of savings and turned that into hundreds of thousands of dollars and then put the money on a property in Idaho. And I realized around that time that I really didn't have very much competition. And so I took whatever money I had and I went to Peru and Bolivia and Mexico, and I would put down options on these properties. After a certain period of time, I found that I had as interesting a portfolio of option properties as any existing silver company. And I knew that even though I wasn't ready for prime time, even though the story was a little bit flaky and delusional, a New York-based financial type with no background in engineering or geology, starting a mining company, I kept it low-key, but I was introduced to George Soros. And he and his brother Paul invested in me.
And how old were you at this time?
I was 32, 33.
Okay, and you were married then?
I was engaged.
Engaged, and did your fiancée say, what do you do for a living?
Oh, no. She was instrumental in the entire process. When I had the vision of buying silver mines, it was in the middle of the night, and she was at NYU. She'd left the Israeli Air Force and was studying at NYU. And apparently at 3 o'clock in the morning, I sat up in bed and said, please write this down so I don't forget it, buy silver mines. And so the next day, Daphne said to me, by the way, last night, you told me to write down buy silver mines. So I'm reminding you, but I'm also gonna add this, that is so sexy. And so I went into the silver business.
Wow. So
she has unerring insight.
Okay, so how did it work out?
I found that it suited my aptitudes to take that money and buy assets and hold those assets. Having a historical bent allowed me to see the market through the prism of history. And so when you see these cycles and you understand human psychology and fear and greed, the history gives you a great perspective. And so if you own the assets and you don't go into debt, it really becomes a function of time before you become fashionable again. And we made a huge discovery in Bolivia, and that's where the fortune originated.
What's been interesting this time around is if you look at Google search trends for Bitcoin or Bitcoin's price against the Bitcoin price itself, you'll find that there's not a lot of speculative activity by that measure. In fact, in 2017, they were 1-for-1 together, but it has been pretty quiescent until maybe very recently, but throughout last year. And so that gave us a lot of comfort. We believe that the institutional behavior and moves recently have been fascinating. We have been expecting institutions to start moving into Bitcoin and other crypto assets, but primarily Bitcoin, the most secure of the blockchains, because if you look at the correlation of Bitcoin's performance relative to any other asset class, it has the lowest correlation, meaning if you buy some Bitcoin, you will further diversify your portfolio and increase your returns with lower risk, right? So that's why institutions look for that low correlation. Bitcoin has it. And so that's clear. We have 10 years of history now. But what surprised me and us generally was to watch MicroStrategy, which has put all the cash on its balance sheet into Bitcoin, and even did another equity offering so it could put more cash on its balance sheet. And I think that's a little crazy, because I think the regulators will have something to say about this in terms of what is this? Is this company the MicroStrategy technology company, or is it like an ETF? So we don't know about that. But then you saw Square put 1% of all of its assets in Bitcoin. And I think you're going to see more of that. We didn't expect that. What we did expect was, because of the low correlation of returns, institutional investors to move in. The most surprising one to me thus far has been MassMutual. It put $100 million into its general account. Now, its general account is enormous. So $100 million is something like 0.001. But what that move told us is, MassMutual is very conservative and very highly regulated. And so it had to jump through many more regulatory hurdles than I thought would have been possible by now. So I think that is a seal of approval. And then, of course, you have the institutional infrastructure moving into place, whether it's with custody, and everyone knows a lot about Fidelity being out there in terms of wanting to custody Bitcoin in particular. You have the Intercontinental Exchange, and you've got the CME now with Bitcoin futures, one settling in kind, one settling in cash. And so we do believe that Bitcoin is getting ready for institutional. But when we actually think about this, is Bitcoin ready for institutions? Bitcoin is it's roughly a $600 billion market cap. So not even half the size of Apple or Amazon, right? Yep. Doesn't put it into perspective. And yet it is a very big idea. I think a much bigger idea than Apple or Amazon. It's the first truly global digital currency out there. And it is completely decentralized. There's no throat to choke